All right, and what was the calm before the storm this week? We started off the week with a very small move, very low volume, not a whole lot going on. And unfortunately, this is not the place from a technical standpoint for there not to be a whole lot going on. We kind of need things to be still picking up the pace. Fortunately, we have plenty of opportunities over the next day or two for things to pick up and really have some bigger moves. So we're going to break down the likelihood that we may continue this bullishness and break through and start a new intermediate trend to the upside. Probably not going to be as long as what we've just seen, but regardless, a really good move to the upside today. You'll see some of the reasons why we talk about that, some of the technical reasons why. It's not today, but for the last 5 days or so, and why that suggests that we might continue with that tomorrow and into the rest of this week. We'll take a look at some of the major, movements. You can see, the reason why we're getting so bullish here with what's going on in yields and other markets. We'll break all that down. And then, of course, the sector rotation, which is not quite risk on, so to speak. So we'll kind of see, what that is telling us in terms of the likelihood of a good, strong intermediate rally, or maybe one that might be on more of the weaker side, shorter term and more of the weaker side. So we'll break all that down, including our trade idea of the day as always. So let's go ahead and get started. Today is Monday, April the 29th, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Hey, before we get going too far, I invite you to subscribe to our YouTube channel with this icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created. Alright, if you're watching us on our blog here, check out some of these other things over here on the right, including our Market Outlook live video. Come down to the bottom, click this heart. It opens up this tab. Hit that like button there. Same thing here. Click this thumbs up icon. It opens up this tab. Hit that like button. Again, the more you do that, it helps get our content out to all of our followers on those platforms. So thank you to those who do this day in and day out. Those who don't, you can do it right now while you're watching with 1 or 2 really easy clicks. All right, let's take a look at the S&P 500 with the market forecast indicator. Here you can see we have another gain. Was this the 5th gain out of the past 6 trading sessions since we had the double clusters going into expiration. The intermediate line has continued higher, now is out of bearish territory, still below market sentiment. Near-term line made its way back into the upper to extreme highs here above the 90th percentile. Despite the fact that the momentum line dropped back to bearish territory. And again, that's a function of a smaller range, which, as we've talked about before, you don't really want to see smaller ranges when you're below moving averages. Hopefully that sets us up for a big move like tomorrow or Wednesday as we pass through the moving average. If we're going to need a bigger than average range. It doesn't have to be too big, but it has to be a pretty decent sized move to get you through. Otherwise, we keep getting smaller ranges below moving averages. It's more likely telling us that moving average is probably going to end up holding as a resistance level there. We're still below the moving average, of course, by about 0.6%. If you look at the Dow Jones Industrial Average, looks very similar, except its market sentiment is out of bullish territory now. Intermediate line is actually still in bearish territory, and you are, again, small ranges here as you're well below, almost 1% below the moving average. Near-term line not quite into the upper reversal zone, momentum line not quite into bearish territory. So a little less dramatic, less extreme as we see on the S&P. The Russell 2000 kind of looks similar to the Dow. The market sentiments out of bullish territory. The intermediate line still in bearish territory. But in this case, your near-term line actually is pretty strongly bullish up there above the 90th percentile. So, but again, a small range, about half the average today. So now again, we have a busy week, so this is kind of the calm before the storm. But like I said, hopefully this sets us up for the day that we get a bear tag ends up being above average on the range, and that will set us up for a good breakout up in the other direction. Finally, let's look at the NASDAQ 100, and you can see looks very similar to the S&P 500 as its intermediate line is coming out of bearish territory there. If we take a look at the dollar index, the intermediate line now has pulled back down. It's kind of flirting with that 80th percentile there, but had dropped and closed just a little bit below the 80th percentile. Market sentiment's flat inside of bullish territory. The intermediate line is still above the market sentiment line, so you still got a bullish trend going there. Your near-term line again is not, it's been up and down, finishing up yesterday or today, excuse me, but not quite into bullish territory there. Your momentum line had jumped up, but didn't get very strongly bullish either. So again, we're not really strongly bullish enough yet, but we're also not bearish either. We're just kind of in this consolidation move right now. If you take a look at commodities, they're also still, despite the pullback, still the intermediate lines above the market sentiment line and rising. You have a bullish intermediate confirmation signal, not as strong because the intermediate line is not quite above the 80th percentile, but your momentum line down there is down below into the oversold territory. So it sets us up for a potential bounce out of that level. Of course, the biggest driver in the commodity space is crude oil, and you can see crude oil has come down and closed, just barely. Got another bull tag today, and pulled short-term sentiment lower. The intermediate line still below its market sentiment. Gold has also been a big mover here. It's also been pulling back. Its intermediate line still in bullish territory, still below market sentiment there. So nothing too significantly bearish on any of these major asset classes. If you take a look at like the 12 grid here for this, here we go. The 12 grid is right here. We don't have the updated chart yet on the TNX, and we do have to change out this symbol here, but you can see bonds are starting to turn up a little bit there, which means bond yields are falling. You can also see crude oil with that bull tag we talked about on the ETF. Gold still strongly bullish. The dollar still strongly bullish. So interesting that those two are going together. Emerging markets really busting through, and that's the pattern that we're hoping that U.S. stocks will follow, but emerging markets really outpacing right now strongly to the upside. And like I said, bonds are starting to bounce off their lows and move their way up to the upside as well. All right, now let's take a look at the weekly chart here on the S&P, and you can see, like we talked about last week, we started this week with a setting up for a pretty decent transition candle here, slightly bullish as of right now. It's a very small bullish body, but that's typically, again, transition candles typically have smaller bodies, but it is definitely a higher close, and if we can close up above this candle's high point here, then we are really set up for a good reversal pattern. So not quite there yet, but we're getting a lot closer to that happening. Again, we don't have 3 green arrows quite yet, but at least we have a yellow line on the S&P 500, so we're getting closer to getting 3 green arrows on there. Again, we're in convergence mode, and you typically don't stay in convergence mode for very long, so it's been a few days now, 3 days for these indicators here, or excuse me, 4 days for these indicators, 5 days for the diamonds, 2 here for the Qs and the spiders. So again, to get either green shading, we need to bust through the moving average, or to get back to pink shading, we need to really drop, which with how strong the MACD is, seems to be a lot less likely. Seems more likely that we'll get the third green arrow first there. So if you take a look at some of the other oscillators, let's take a look at the moving averages broken out. You can see we are back to that 50 and 30-day moving average, which again would make the break above them significant, because you'd be getting above both lines there. But you also see, again, we're trading between moving averages with smaller ranges, and that's not necessarily bullish. So that's something to keep an eye on. If you take a look at some of the other oscillators, the DMI, you can see the negative indicator is back below 30, is still above 25. The positive indicator is above 20, but still not above 25. So we haven't quite broken out there yet. Your RSI is out of bearish territory. It's in the upper half of the chart, but it needs to get above 60 for us to be able to stop, to say, okay, now we've turned from green or red back to green here. So we haven't had that pattern yet, and we're obviously not back up above positive 150 there on the CCI either. At least the weekly CCI has turned back up to positive levels too, so a little bit of a positive development in that regard. Looking at the Ichimoku cloud, again, we do no longer have a bearish trend. It hasn't dropped to zero, but it's back below 50 on the trend noise balance at the bottom. Where my cursor is, we're back below back above, -1 on the trend quality. We're back above both the green and the slightly above the blue lines. We're not quite back above the cloud yet, and obviously we don't have a positive rate of change yet either. But still moving in the right direction at least on that particular indicator. And then you can see from the Bollinger Bands, the bandwidth is falling. We're right at the midpoint. We have not crossed into the upper quartile yet. The momentum continues to move towards zero as the bands are moving back towards the Keltner channel, but have not crossed back through them yet to get those red dots, which is another indication of a trend change. Typically when you get the red dots there and you squeeze and bust out of that pattern in the opposite direction. Again, we took a look at the volume and the trading range. I told you they're both pretty small, 3.5 points, but about a little more than half, 46 million shares trading. So again, very small numbers for both of these. Still at relatively high levels, but again, we don't want those small numbers to occur when you're still below, like I said, the 30 and 50 day kind of those intermediate term moving averages. When you look at the VIX, we didn't take a look at the intraday range. Let's take a look at that here really quick. A higher high and a higher low, barely finishing above last week's high, which happened to be Friday's high point. Again, very small volume. We broke slightly above the upper half of the range. We are above the moving average. We're out of bearish territory. We're above 50. Not back quite into bullish territory yet, but hopefully we're just a day or two away from that being the case. The hull has turned to the upside. We have a green hull. We're getting pretty strong candles. PPL is above its moving average. So at least that's a positive for you are below the 200-day hull. So again, another sign that we need to be getting bigger ranges right now, not smaller ranges, because smaller ranges keeps us below that average and not get us, not able to get us back up above it. Now let's take a look at the VIX and see how it's finished the day here. Dropping back below 15 for the first time in a week or so. Easily into neutral range. Still hasn't broken 90% yet. We'll be strongly bullish when it does. The VVIX has really dropped down to extreme lows again. So here we go. What's it? 1, 2, 3, 4, 5, 6th time now that we've dipped below 80. And it dropped hard and fast, and that's why your VIX is dropping now. In fact, if you look at where the VIX is lining up here relative to its average values, we have now closed back below the 200-day average value for the VIX. So, if we can hold this and follow up and build on it the next day or two, great. Otherwise, you can kind of see we're kind of at that turning point where, we either are going to build upon this bullishness and maintain a good beginning of a new trend, or this is the pivot point, right, where we're going to find out really quickly tomorrow or Wednesday, and we're going to get a bounce back up on volatility and move coinciding with the move lower in equities. I expect more of the former. I expect that we'll build on this bullishness and really bust through that moving average, but we do have to be aware of that possibility of it actually now pivoting here, like right now, like Tuesday, tomorrow, or if we have a small range day tomorrow, then Wednesday, right? We're kind of at that pivot point where we can really make a significant move one way or the other, not just kind of grind up or grind back down, but either like really break through and start a new trend, or really bust down and start a new leg lower. I don't think we'll get that though until at least we get a bear tag which might mean tomorrow's got a pretty good probability based off of the technicals, of course, not knowing any of the news that may impact it, but just based off of the environment we're set up tomorrow, setting ourselves up for at least a small move to the upside. All right, now let's take a look at what's driving a lot of this price action here. So we'll move over here to the asset class comparison chart. We talked about gold's had such a good strong run. It just happens to be slowing down right now, but nothing too significant there. Just the pullback. You can see emerging markets, as I showed you earlier today, had the big move. Small markets outpacing, which actually did really good in terms of helping the breadth. When you look at the breadth indicators, they really jumped up to the upside. First of all, the skew jumped back above its moving average, which is a good sign to get that back above its moving average there, a bullish sign. Number of stocks above the 50-day moving average jumped back above the 50% mark, barely, and it's not above the moving average yet, but you can see how close we're getting. The number of stocks above the 200-day moving average did get above their moving above the moving average, and is that close to getting back above 400. So things are turning up in terms of the breadth. When you look at the McClellan oscillator, wasn't quite there at positive 35, but at least it's positive. We got up to positive 20. I mentioned the skew, the number of new highs and new lows. In the NASDAQ and the New York Stock Exchange combined, back to positive levels, almost back above that positive 100 mark, which is kind of a important level to start trending again, for the market to be able to start trending again. So good breadth all the way across the board, as was mentioned with that stochastic indicator here. We do want to be able to see things turning back around, and that appears, it appears to be the case. The ratio of number of stocks above the 50 and 200-day moving averages has also dropped back below its moving average, which again is another good positive sign, as you can see here, for bullishness when we are back below that moving average, especially when it's this high and you're falling back below. So a good opportunity here for breadth to lead the way higher. Than the Qs relative to IWM dropped today, but nothing too significant, kind of converging on those moving averages right smack dab at the same level. Again, as long as we're above the 200-day moving average, there's a good opportunity that we can markets can be bullish regardless of whether the ratio is going up or going down. Breaking the 200-day moving average, now we have an issue, and so that's how close we are. We just haven't done it yet, and so until we do, we again assume that you'll stay above the trend line, as the trend line is currently rising up to the upside there. If we take a look at the sector moves and how they're performing, so let's pull up the sector comparison chart. Again, you can kind of see energy with the big winners in the past 3 months combined. But if you again just look at today alone, discretionary, thanks to Tesla, was your big winner. But you can see it's still utilities and still real estate. When you look at the sector rotation here, it continues to be utilities and staples and healthcare and financials. Real estate is moving up now. Discretionary is moving up too, but communication services down to the left. Technology is moving over to the left. Industrials is moving in the wrong direction there. So it's not your typical risk on move. You're getting a lot of kind of risk off rotation going on right now into some of these areas that you wouldn't expect would lead the way higher on a market move to the upside. If you look at since the low point, starting that Monday after options expiration, it has been technology and discretionary leading the way higher, 4 and 6% gains. Communication services is actually lagging with kind of below that moving below the 0% line. Everything else lagging besides technology and discretionary. You can see again, it's really those Mag 7 names in those particular areas. The top 3 stocks here are in XLK. You can see Apple's doing pretty well with the breakout there. Nvidia is setting itself up for a bear tag, which could be the new move, the beginning of a new move to the upside. Google, after that big blowout earnings result, pulling back down over 3%, 3.33%. Cisco with another cluster there. Tesla, as you can see, getting dark green shading in the green line as it's really broken up and now has a positive gain for the past 3 months. Not obviously not as big as Nvidia's gain, but positive nonetheless. Meta remains bearish. So of all the kind of the Mag 7 names, Meta and Google after the rally to the upside are the ones that kind of struggling the most. Microsoft was also not benefited necessarily from the earnings result, the earnings release. All right, that takes us to our trade idea of the day, and I'm going to take a look at Texas Instruments, one of these chip names. You can see it has a strong bullish pattern, closing above the highs of the last couple of intermediate runs to the upside. Obviously fueled by that earnings release, the intermediate line is rising back above market sentiment and almost into the upper reversal zone. The last time we failed to get significantly into the upper and stay in the upper reversal zone. We're over 5% above the moving average here. You can see things are turning bullish when you look at all these other indicators. The weekly chart, strong bullish pattern there with the green arrow already, big candle. If we take a look at the 3 green arrow chart, you can obviously see we have easily have 3 green arrows in the green line, and what initially on the 3 green arrow trade after the earnings result, we did have the jump in volume there. If we take a look at some of the other oscillators here, we'll take a look at the DMI. The DMI here, so you can see that you have, again, above 30 in the positive indicator, below 20 on the negative indicator. So a good bullish breakout pattern there. You see that as well in the RSI and the CCI. They're also breaking out to positive levels of well above 60. Easily above the 100 mark. You can see it also got above the 150 mark there. Then you look at like the Ichimoku cloud, and you can see the beginning stages. These moving towards the beginning stages of a new intermediate trend to the upside, intermediate strength trend to the upside. And then finally, when you look at the Bollinger Bands and the Keltner channels, you can see that we are pushing up against the upper Bollinger Band outside of the Keltner channel. The bands themselves have moved outside the Keltner channel, so we have a pretty good positive move. And so what we decided to do here was to do a bull put spread, selling the 35 close to the mid 30s delta, buying 1 strike away. That gives you this setup with that break even. That break even, when you look at it here on the intraday chart, pretty much suggests that for us to take a loss in this trade, in this case, we would be willing to take a $468 loss, because that's what we're trying to make. We'd have to break down back into that gap essentially for us to get to that point and take that loss here. And you can see there's a pretty decent probability of that not happening. If you look at where that line is on these moving averages, we'd have to, as of right now, we'd pull back to the 8-day and we'd be there. But you can see how we've broken out of the point of control. We've broken away from the value area. The 8 and 17-day moving averages have crossed, so they'll probably be above that break-even line here sooner rather than later. So a bullish setup on a stock that may ultimately end up being more directional, but it doesn't have to be now. Now we can move just slightly into the all-time high or the 52-week high here, and we don't have to bank on it having to actually break that high for us to get a reward that we're shooting for. All right, that does it for today. You've heard from me now, and I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at marketscholars.com for free. Follow and like me on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all tomorrow.